Good afternoon, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris Swarsick from Elite Currency. And as always, we start off with the euro dollar. It was sinking a little bit further than I thought. 117.25, 117.75 was the head and shoulder support zone where I thought price would respect. It did go through that, but is now testing the previous bottom. So that's going to be an important zone and could certainly provide a bounce together with the long-term moving averages, and we have the short-term moving averages coming in as resistance. So certainly price is being squeezed at this moment, and it's going to be a tough spot in general because of that. Ultimately, I wouldn't be surprised if there's some bounce, at least to test the double top first. And what really is important is the break, whether it breaks above the 20 EMA high or whether it breaks below the 144 EMA for a larger push up or a larger push down. I think both are, from technical point of view, possible and likely. And I would say it's a coin flip here from that point of view. Ultimately, there's arguments to be said for the upside because its price is at the 38.2 fib again. And there are arguments for a break and a deeper move because this is maybe still an ABC pattern down to the 50 fib, for instance. So if we look at the daily chart, I think it's very important to sense whether we get a break or bounce, how price is responding to the previous bottom. If we look at the 4-hour chart and put a fib on that swing up, it is in that 78.86 fib zone. We have already a 4-hour kind of reaction candle. So I think the daily candle is going to be important to see what kind of reaction we have. If there's a strong pin bar, that could indicate a reversal. If there are indecision candles here, or if a 4-hour, 1-hour chart, we see price lingering, not able to break above the 20 MA, making kind of a flag pattern like that. In that case, a bearish break could confirm the push lower to the 88 bottom and maybe a break below the bottom. And after that, the targets are at 116, 115.50, and 115. On the other hand, if we see a strong momentum move up, challenging the 21, and then the long-term moving average is followed by a flag at any point, and then a continuation breakout above that, that would certainly change perspectives, and it could, of course, look a lot more bearish. So, yeah, from that point of view, I think it really depends on what kind of price reaction we see at this support zone. I don't think it's a good spot for up or down at this moment. Because it's a strong momentum, but it's also a strong support. So I'd rather look at the reaction and the breakout after that for the the decisive kind of push into up or down in the short term at least. In the long term, we're looking at a break above the double top or below the bottom really. Before, in my view, there's more clarity about that decision. So yeah, a bit boring maybe, but it's just that's how I see it at this moment. More adventurous traders might be looking for a bounce up, but you can get caught nastily. Was thinking the same here, and it didn't really move up that much, only about 40 pips, I guess, and it snapped down again. So that's one of the disadvantages of reversals, as you can see. All right, pound USD. Nothing much more exciting, unfortunately, but I think that the bounce is looking better. At this spot, because it's at the trend line, and this could easily be a triangle pattern. I think that there we have a higher low, we have a lower high. This could be another higher low, and that could be, for instance, an A here, a B, a C, and a D, and a E, and after that, it could break or bounce and then break if it is that ABCD like this. For instance, it could be a bullish triangle as well. We would just flip it around. In that case, this would be A. We use blue. This would be B. This would be C, D, and E. So it depends, of course, of the does it break above the resistance trend line or below the support trend line? But basically, yeah, it is looking like a triangle pattern, and therefore a bounce. Whether it's a bullish or bearish triangle is certainly a possibility. There's a doji last 4-hour candle. And we see some reaction here, and it's at the 88.6 fib probably, just eyeballing it, but it does look like that, or very close to it. So I think here it's probably going to bounce and make an ABC up towards the resistance, and then move down again. So a range trade here or here or here back down again, to me, makes the most sense at this moment. If it breaks through the 88.6 fib with a daily candle close and challenging this bottom, we're breaking below this bottom, then on the lower time frames, a flag on the hourly chart and breakout makes sense as a break pullback continuation. And why the flag? Because in this case, I would want to avoid a close in reverse, which certainly could happen at double bottom. It could become a triple bottom. So that's why it's important to not only see the break, but a flag on lower time frames and continuation. Because if it doesn't show a flag and on a lower time frame it's skyrocketing up, after it breaks this trend line, it could be a close in reverse and there could be a triple bottom. That's why trading the break just as it is risky. All right, so that's it from my point of view. Hope it helps. We'll be back tomorrow with a live webinar and Wednesday again with the EUR dollar pound dollar video. Wish everyone great trading and a great week ahead. Cheers, bye-bye.